Citigroup CEO Jane Fraser saying this week that the bank's first quarter financial results will probably be better than expected. Speaking at a conference, Fraser also said Citi's reorganization will be complete by the end of this month. And Citigroup is our next guest's number one bank pick. It's been a while since that, I would think, maybe based on this. Joining us is Mike Mayo. Is Mike Mayo, Wells Fargo Securities head of U.S. large cap bank research, officer and a gentleman. Louis Gossett.
Okay, it took me a minute.
Why do people not understand what I'm saying immediately?
Because you're referencing 40-year-old
It's only 40 years ago, Richard Gere.
Give me
Mayo.
3 seconds.
Mayo. So this is a big deal for you, and you think it's this restructuring. In your latest note, and this makes you bullish on Citigroup, and you compare it to some other restructuring. This one at P&G, a consumer products company, but I thought you said Citi's 0 for 12 with previous restructuring.
Well, I have one word to sum up my view, and that would be...
Oh, and you brought us on.
Yeah.
Oh, good. Okay.
That sums up Citigroup. Citi is on a detour from 25 years of horrific performance to improved performance. They are 0 for 12 when it comes to their restructurings. We think for Citi, number 13 will be their lucky number. And what's happening here is, in some ways subtle, but extremely powerful. They are going from this matrix management structure, all these countries and all these functions, to 5 lines of business. It's very simple. Services, banking, markets, consumer, and wealth. And the 5 heads of those businesses, they are Shamir, Andrew, I'll try to get them right. We have Andy Sieg, head of wealth, and a couple
of Merrill Lynch guy.
Exactly. And you have 5 heads of these business, and they report to Jane Fraser. And that's it. And then you have cascading effects down to the bottom of the firm. They're delayering the number of management layers. 13. Who has 13 management layers? Joe, how many layers are between you and the CEO of CNBC?
0.
You're the CEO.
What about
no? For me to talk to him?
Yeah.
Not very many between. We have a good, but we're different. We're not really in the line of command. We're not middle man. We're not right.
No, but
you know who my boss is? The viewer, really.
Okay.
That's in my mind. I'm going to get a call from Casey.
Not the ones you blocked.
Yeah, not the ones I blocked. Can't block him. Right.
But first of all, they brought out their dirty laundry, saying they have 13 management layers, which is crazy. They'll be down to 8. And people say, well, this is going to take a long time to work out.
That's what I was going to say. How long's the detour?
Guess what? The answer to that? By the end of this month, 3 weeks from today, Citi will have made all the major decisions about where people stand within the firm. 3 weeks from today, 21 days. So people say, oh, I'll look at it in 2 or 3 years. No, you don't have that long. Okay, so 3 weeks from today, they will have delayered from 13 down to 8. They will have 5 lines of business. There'll be the accountability and the transparency. And the first time ever, these 5 lines of business have profit and loss statements. They have returns. They have capital. So they can be held accountable, and we can follow them from the outside.
Is it really all dead weight? I mean, I'm trying to figure out if this is like when Elon took over Twitter and laid off half the people immediately. Do you see a difference on the other side? Is there a problem? Is it cut too much, or is this the right amount?
They said they'll eliminate 20,000 people, and it's painful. And I've been fired a few times, as you know, and it's a very difficult situation. But I think they get over the hump soon. So people say, well, Citi's never done this before. So I'm walking around the Wells Fargo equity research floor, and we have dozens and dozens of analysts. And then I find the consumer staples analyst, Chris Carey, and he's like, well, this sounds like Procter & Gamble. And Procter & Gamble, several years ago, they had all these functions. They went to 6 lines of business. Citi's going to 5 lines of business. They sold off businesses equal to 10 to 15% of revenues. Citi's selling off businesses equal to 10 to 15% of revenues. Procter & Gamble, according to our expert at Wells Fargo, was a very challenged company. Citi's a very challenged company. It worked in spades, according to our analyst, for Procter & Gamble. So it worked for Procter & Gamble, can work for Citigroup. But I'd like, or your viewers, or anyone who deals with me, or you, if you own Procter & Gamble, give Citigroup a look, because there's a lot of parallels here. We have a whole new report that talks about those parallels. So when you say, oh, Citi's never done it before, Citi's never gone to 5 lines of business before. They've never sold 10 to 15% of their revenues before. And they've never had the sort of accountability at the top. Jane Fraser said there is nowhere for her to hide. And so you know what? In 3 years from now, by 2026, she says she is with high conviction, she expects Citi to have an 11 to 12% return. By the way, my estimate's only 10%, and I expect the stock to double. If they get to a 10% return, they trade at tangible book value, which we have at $111 in 2026. No, heroic assumptions here. And consensus is only 9%. But guess what? If she doesn't get a 10% return, double-digit return, in 3 years from now, she could be out of a job. On the other hand, if she actually gets the returns she thinks she'll get so far above consensus, she could be Banker of the Year. So on this International Women's Day, the only woman who heads a major U.S. bank, Jane Fraser, she has a chance to really, she could fail like the other 12 restructurings, or she could wind up being the Banker of the Year. I'm leaning more toward Banker of the Year. It's not risk-free. She's built out a great plan, but they still have to execute.
These are all, just in my mind, it's moving between $4.50 and $6. I can't shake the 1 for 10 after the financial crisis. Jamie Dimon went through the same crisis Chuck Prince went through. His bank's now worth, what, $500 billion or something? This is worth $100 billion. It's never been able to get out of its own way, and it's still a $5 stock.
Well, I was on your show back then. I put the sell rating on at $480 in 2007, and then the stock almost failed the next year and a half. So you're right. That's why they're 0 for 12. That's why the stock is so inexpensive. I mean, the tangible book value on their balance sheet is $164 billion. The market value is like $110 billion. Where are the holes? Where are the CDO $50 billion, the CDO that are losses?
Jane's been there for a while. This has finally happened. How long she's been there? How many years?
It's like 3 years now, and going
finally, and it's still at $5, $58, whatever. I mean, if people don't understand what I'm saying, this is equivalent to like $5 after the $5.80, right? After the 1 for 10.
Yeah, and by the way, I go to annual meetings, and the shareholders, many remember that, and they're still very angry. And
well, I would think they've got a tenth of what their stock was worth at one point.
Yeah, but I think there's a lot of pressure on Jane Fraser to deliver.
Okay.
And by the way, so the detour.
Don't get mad. I don't. If I could buy it, I'd buy it, but I can't.
Okay, but I would
probably
say
wouldn't,
the detour is really this. That's the detour.
Oh my God! You're going to cut your tie. Oh, you don't have a tie to cut off. You've done that before too.
The stock's going higher, Joe.
Okay, I believe you. When did P&G? Who was its CEO that orchestrated that?
We have an expert analyst who covers it.
No, I know. How many years ago?
That was like 6 years ago. 7 years
when
ago.
he came back.
Mueller,
was it John Mueller, or was it when Lafley came back? Maybe.